Hey, good morning, everyone. Brian Hoops here, Midwest Market Solutions. This is Market Insider TV. This is our opening commentary Tuesday, June the 24th. Good morning. Hope your day is off to a good start and a lot of bright sunshine here in Springfield. Going to be very warm this week, back to summer type temperatures. All right, let's look at markets in here. Of course, big news coming out of the crude oil markets. We had almost a $10 range Sunday to Monday's close, down sharply, and we're down again overnight. We're down another $2.50, almost 4% in the crude oil. Really setting back off of our highs. We were, I think, $78 near the opening on Sunday evening. And this is markets telling you that we're going to have peace in the Middle East. There's not going to be the disruptions that some of the talking heads on TV is telling you. Follow, what the money does. Follow these markets. These are what is going to tell you what is going to happen, as markets always are trading anticipatory, not what potentially could happen based off of speculation, innuendo, what a lot of the media has to say. The dollar is weaker here this morning. Net gas is down a little bit along with the crude oil. Stock market stronger. We're moving to new highs in here ahead of Jerome Powell speaking, and it's unlikely he's going to talk about cutting rates, even though he should. He's likely to hold steady, but even steady rates environment here, stock market is moving higher off of that news. As we've noted before, gold is a safe haven along with silver. Stock market moves higher. People are going to sell gold, and that's what we're seeing in those markets. Corn down 2 cents, beans down 6, and the wheat is about 10 to 11 cents weaker in the overnight. So let's talk about these markets in here. You can go to our website, MidwestMarketSolutions.com, and sign up for our daily newsletters, our Twitter feed, Facebook feed, our YouTube video series. So that way you don't miss out on any of the market information. And maybe most importantly, sign up for our text message services. I send out the text messages personally, and we have speculative recommendations as well as hedge and overall market information. So you can go to our website, and get signed up there. So weather maps continue to look nearly ideal for growing conditions across Corn Belt. 6-10 day, 8 to 14 day, looking at above normal temps and above normal precip through July the 3rd. This is a bearish forecast. We get past 4th of July, and there is just very, 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 very few times in history where it's been bullish, paid off to be bullish past the 4th of July. It has happened, and maybe it could happen again this year with the right weather scenarios. But right now, it doesn't look promising. It looks like we're going to see weakness into the 4th. And maybe then we'll see what the weather forecasts do after that time frame going into mid-July. But until then, it looks very good. First notice day for July grains is Monday the 30th, with deliveries beginning on the close on Friday the 27th. So you have to be out of these long positions by the close on Friday. Stocks and acreage report, that'll be released Monday, June the 30th at 11 a.m. Newswires are gathering their information from analysts. We'll submit ours today and get those numbers to them so they can get those compiled. We're looking, I think, bigger corn acres and less soybean acres than the March report. And that's early, kind of our early guesses, our early releases at this point in time. So all important report. This is probably the biggest market moving report of the year. We had crop progress conditions out yesterday. Corn, 70% good to excellent. That's actually down 2 on the week. Gave us a little support early, but that faded as the morning wore on. We were 69% good to excellent last year. Soybeans 66% unchanged with 67% rating last year. I kept rating steady in both corn and beans. Thought without much rain last week, we wouldn't see an improvement. And not totally surprised we saw a drop in corn conditions without some rain last week, but next week should improve. Spring wheat conditions are 54 good to excellent versus 71 last year, down 3 on the week. Winter wheat conditions kind of becoming meaningless now that we're into the harvest. They're 49% good to excellent, down 3% from the last week and the last year. Harvest is starting to advance quickly. There's a lot of heat, a lot of dryness in the southern plains. 19% of the crop has been harvested, 40% last year. We're going to make up ground here real quickly, I believe, as a lot of producers want to get their crop out as quick as possible and then get some double crop soybeans in behind it. But it is very hot, very dry, so near ideal harvesting conditions. This week's cattle facts show list, it's down 5,200 head for a total of 227,000 head. Now, I've heard a lot of calls for steady to lower cash. I think you're steady to higher this week. The cutouts have gained a tremendous amount. They were mixed yesterday, but Select was up almost $6 yesterday. That has helped heal the packer margins considerably, and that means they can and probably will pay up for the cash markets here in the next week to 2 weeks. So with the show list being down, I'm looking for steady to higher cash trade, not steady to lower, like a lot of the calls are for this morning. Box beef for exports last week sold 174 loads. That's better than than the prior week, or a 26% increase. Year-to-date sales, 1.158 loads, and that's below year-on-year numbers. We're still down compared to last year by 5.5%, but our sales did improve quite a bit last week as cash prices pulled back in addition to that. All right, I'm going to sign off here and wish you a great day of trade. As always, reach out to us. This has been Brian Hoops, Midwest Markets. Good luck and good trading.